All right, so noted market bull Tom Lee, he says this is a viable dip. You share that opinion as well. I do want to ask you, should we be concerned at all about other economic reports, other tariff announcements as we buy this dip? How safe do you think it is right now? And do you think the volatility is over? Is everything priced in?
I certainly don't think the volatility is over, and we aren't out of the woods yet. I do agree with Tom Lee, though, that if you look at the S&P 500, we've had a 9% drawdown since the all-time highs. Interestingly, more than half of that is as a result of the Magnificent Seven's 14% correction. So if we go back to 1980, if an investor were to buy every 10% dip, and fast forward 6 months later, you're positive 76% of the time. And in a non-recession scenario, you're positive 86% of the time. So those are pretty good odds. But now the question is, will we enter a recession? And the market's really trying to digest and figure out what tariff policy will actually be at the end of the day. So we're not out of the woods, but I do think for long-term investors, this is a buying opportunity.
All right, so fair enough. Tom Lee talking about the S&P 500. I want to go back to the NASDAQ, actually. The NASDAQ and the NASDAQ 100, both of them still more than 10% off their 52-week high. We played some sound earlier from Altimeter Capital's Brad Gerstner, specifically talking about NVIDIA, but talking more broadly about tech with valuations going down. With the NASDAQ, in correction territory, that's the way people talk about it. Is that a specific area of the market where you would see as a possible area to buy the dip? And then what about small caps? Also more than 10% off their 52-week high.
Yeah, so if we look at the NASDAQ, if you are underweight tech, this is a good opportunity. So if you look at the Mag 7, they're actually trading at their lowest premium to the S&P 500 that we've seen going back to 2018. So they're at a 26 times forward multiple. But as we look at sectors, style boxes, a basket of securities, you can't look at that monolithically. So if you look at the Mag 7 and you look at an NVIDIA versus a Tesla, I agree completely with Gerstner that there's a lot of opportunity with NVIDIA. It's 25% off its 52-week high. Nothing that's happened over the last 4 weeks changes that investment thesis. Tesla, on the other hand, you've got Musk, saying that we're going to double production in the United States, but does it matter if demand is waning? They've got a lot of issues in Europe and China. And what we saw in recent data on car registrations is that demand may also be waning in the US. So for us, Tesla's not an entry point. So I think tech there's the most opportunity there. There's the biggest drawdown for investors who've been underweight tech, but be selective about what you're buying. As it relates to small cap, I think it's still early there. If you look at a higher for longer interest rate environment, more than half of the companies in the Russell 2000 are actually unprofitable. So you need to be even more selective in small cap, and I think that's still a little early.
So a quick question for you. Just looking at what our data team sent out, the XLP that tracks the consumer staples is actually on pace for its worst week in about 2.5 years or so. A lot of people are calling staples one of the safety plays. Are you concerned if we're starting to see safety plays, even those break down a bit?
Well, I think certainly the market is digesting, news in real time. We see tariffs are on, tariffs are off. We're friends with Ukraine, then we're not, then we are. So the market is really just reacting to headlines. We've been telling investors you cannot make major portfolio shifts based on noise in headlines that are changing hour to hour, day to day. So the fact that consumer staples are breaking down, that is less concerning to me than some of these data points that have come in. The most recent on GDP that's showing, previously we were talking about, are we going to have 2.5% GDP growth? Now we're talking about, is it positive or is it negative? So at the present time, this can be turned off as quickly as it's been turned on. But the longer that uncertainty wanes, the bigger the impact on both the investors and the businesses as they look to make decisions on investment and M&A.